Okay, folks, welcome to Swing Trading Today. This is Bob Desmond, and it is 5/21, May 21st, 6:03 in the a.m. We changed the time up a little bit today just to see if we got more engagement and just for the heck of it, changed it up. So, taking a look at the Nasdaq this morning in the pre-market, we are looking at a market that is down, and the proximate cause of the market being down could be attributed to the ratcheting up of tensions between China again, but also let's face it, we have data coming out this morning that could certainly move the market, but I'm of the opinion that, you know what, it simply doesn't matter. If the data comes out bad, what are they going to do? They're going to print more money, and they're going to goose up the market. The banks are getting a direct funneling of cash now. We need to start looking at the banks as a possible investment, how they're going to make money. I'm not quite sure, to be honest with you, but they're going to pump this market up come hella high water. So the Nasdaq pulling back, taking a look at the Russell pulling back. Let's clean this all up. Much better. All right, so on a 4-hour basis, technically the Russell is broken down here. There you have it. And we are pulling back. So, warning flag on the track here. I don't know what the heck that was. And that's what we're looking for. We're looking for a pop up higher. But we do have resistance above here. Let's take a look. Where are my trip cues? Let's go to the S&P 500. Let's do the same here. Clear it all up. There we go. And once again, support has been broken on a 4-hour basis. So definitely some pressure here on the market, but we've been here before where we think we're going to get a significant pullback. We're down on the S&P 500 by 0.75 percentage point. We're holding that rising 20-period moving average in blue here. Now, what I thought was surprising this morning was that Thomas, good morning. NY, good morning. I don't blame you for selling Yang. It broke down on a weekly basis. I think that we need to see how this settles down. Yang is extremely volatile, so I don't think that you did the wrong thing there, NY. All right, gold. This is surprising. And it's an opportunity. So I will be stalking gold and the miners with with great interest over these next couple of days. And the reason why I say it's surprising that gold is rolling over here is fear. You know, if there's a potential conflict with the Chinese, whether it be economically or uh, militarily, you would think that gold would be a flight to safety, and it's not. Therefore, I want to check out the dollar as well. We're still well above that 1700 mark. Let's take a look at the miners in the pre-market. This was kind of a tell. We're down. We're down slightly. We're down about $1. But this was the tell here. This bearish reversal bar on the 20th. So the GDXJ looking interesting. Ideally, we get a further pullback here, and we will definitely be buyers at a price point that looks interesting. What else do we have here? Let's go to the dollar for a quick second. Good morning, Trent. Bank of America said gold is going to 3,000. Yeah, they jinxed it. Yeah, good point. Yeah, gold is now becoming mainstream. And I don't think it's all that mainstream yet, but it's certainly become more of. I mean, we first started talking about it, nobody wanted gold. Now all of a sudden, everybody, at least institutionally, wants gold. All right. So the dollar lethargic. It's still holding in there. I mean, you're just shy of that 100 mark. We've been consolidating in this range for quite a while now. So we're kind of in the middle of a trading range. And there we have it. I mean, not much activity going on here. Let's check out oil. Oil. This is the Brent price. We're up this morning again. We recaptured a support level. The only concern here is that while we're breaking out to new higher highs, we have RSI putting in lower highs. And I want to take a look at natural gas as well. Here's a light sweet crude before we go to nat gas. Yeah, same deal here with RSI. Very strong price action. Light sweet is up 2%. Now to nat gas. Should have had this ready. Okay. Let's clean this up. There we go. We are down about 2% this morning. Yeah. Out of curiosity, I just want to bring this up on the daily chart. Yeah, I didn't look at this last night. So we had a big down day yesterday. We've been looking for an opportunity to get long of nat gas. And we may have our opportunity, but you want to stay really, really small initially because we could break to new lows. A 30-minute chart. Not a horrible close yesterday. But if we break that 1488 mark on UGAZ, we're going to lower lows here. Obviously. All right. So we'll watch that one. Silver. Finally a pullback here. We broke support. So silver's had a really nice run. This rally was unsustainable. Here we were on borrowed time, and finally we have broken. So this is another one where we'll want to take a closer look at how we closed out the day yesterday. Yeah, lots of stalling action here. It could have actually gone either way today with doji star formations most of the day yesterday on this 2-hour chart. We're rolling over on Ultimate Oscillator, rolling over on Stokes. So it looks like, yeah, look at this. RSI was at 81 on a 2-hour basis. So I think that this is a pullback. We'll be looking to buy. A lot of institutional accumulation here. Look at the volume. This is not mom and pop buying 100 shares. This is heavy trading. Very nice. If anybody's got a couple of, well, 6 o'clock is not a very active time. I have more, I have more viewers at 5 a.m. I guess people aren't used to seeing me on at this time. If anybody has a couple of charts they want me to go over, we'll take a look at it. You know, we'll take a look at Yang. Ooh, Vietnam. How did we close out yesterday? Copper? Okay. We can do that. Look at Vietnam ripping here. This is a weekly chart. Oh, before I forget, tonight, Thursday Night Stock Charts Live, 6 p.m. Eastern Standard Time. Join us. Tell a friend, please. Yeah, Vietnam is ripping, and it's going to rip again today in all probability with this China news. Richard, good morning. XOF? Sure, Thomas. Absolutely. All right, so Vietnam looking really good. Copper. Do-do-do-do. Where is my copper? Here we go. Okay. Copper down. Just shy of about a third of a percentage point. Nice move this week. Let's bring it up on, excuse me, on stock charts. Get a better feel. Really nice move yesterday. In fact, we broke out. Let's pull back. Let's go high level. Yeah. Monthly chart, we're up nearly 5%. We do have some resistance above here at around, you know, we're at, where do we close out yesterday? At 2.46, and we have resistance right at 2.48. So just be aware of that. And once we get through there, 2.64 on copper. I mean, it's definitely firming up. This is a quarterly chart. So far, this quarter, we have a bullish reversal bar, but we do have a little over another month to go in the quarter. And an inside bar at that, meaning no new high, no new low on the quarter. So copper's looking interesting. I would just beware of those resistance points above, and we are leaning into the third standard deviation Bollinger Band. So I wouldn't initiate a new trade here. But that doesn't mean it can't creep up a bit higher before you get a pullback. And if you get an orderly pullback, then that's your opportunity. Some new names out there. Good morning. What's going on with Mark? Is that a symbol? Let's see. Remark Holdings. Can you validate that? Jesus Christ. What sector are they in? Communications, publishing. What's going on with them? I'm not exactly sure. Let's beautiful breakout. On massive volume. Thermal imaging, AI system scanning, 100. I see. Okay. I'm wondering, when I take a look at a business like this, I wonder what the competition is like. I would imagine that there are a lot of companies that are able to produce these products, and maybe they have the best one out there. For all I know nothing about it, but I definitely couldn't initiate a new trade here, because if you just take a look at the weekly chart, I mean, technically, on a technical basis, you can't buy these shares, not if you want to preserve your capital and use discipline when you're entering a trade. Because if you take a look at where we're trading at current, we're trading above the third standard deviation Bollinger Band here in red, and I'll save the technical jargon, we're not supposed to be there. But for all I know, they could have a backlog of orders. It could be the cheapest stock in town, for all I know, fundamentally. So I'm only speaking to this company on a technical basis. And while it's certainly a pretty chart, it's overbought. Quote unquote, air quotes there on overbought. That doesn't mean it can't press higher, but you're already seeing topping action here on a weekly basis. I saw a lot of sellers move in to spot 6.8. I'm willing to bet we have history here, and we do. It was resistance back here, March of 19. Resistance back here in 17. So you have a lot of resistance above. So I wouldn't say initiate a new trade, but I think you're going to get a quick pullback, probably a freaky pullback, a scary one. And on that pullback, if you're a believer in the story of the company, then you need to take your leap of faith and step in and buy the shares on that pullback. But technically at current, I would have to say avoid. Now, here's your pullback again. This is a daily chart. Pullback off of the third standard deviation Bollinger Band. And people bought. They took a leap of faith. Right down here, 1.21, where there was history of support below. Now they're limping it back up. You're seeing some topping action here. I couldn't buy it. That doesn't mean a month from now that these shares won't be double where they are right now. All it means is that as an investor, it wouldn't be prudent for me to step in here and to open up a position at this point. Technically unsound and unwise. So I would avoid right now. That doesn't mean they're not moving up higher in the future. Made a lot of money with them. Good. All right. Let's, for Richard, let's bring up the spiders. In fact, let me take a look at Mark on TrendSpider. TrendSpider I often find is my spell check for technical analysis. Just in case I miss something. Yeah, again, TrendSpider for the most part is validating my suspicions, and that's not suspicion, the fact that we are very, very overbought here. But I'll tell you, once we get through, these volume bars here are important because it shows you the history of the volume at certain price points. And once we get through here, at around 3.22, there's really it's in fact even lower than that. 2.74. We break above that price point. You don't have a lot of history of price action there. And that means that you're not going to have a ton of overhead supply. Let's validate that yet again. Yeah, so a rally up and through, let's call it 2.80. You could see high fives, low sixes pretty easily. Look at the volume now relative to prior quarters, and the quarter's not even done yet. So pretty impressive stuff. But again, it's all about the entry point. I'll wait for that pullback. It'll come. Guaranteed it's going to come. Let's bring up the spiders. Okay. In fact, let's go over here. Obviously, we're down in the pre-market. I'm of a couple of different minds here. I think that there's every reason fundamentally for this market to tank. But what I've heard in the recent days out of Treasury and out of the Federal Reserve is that they're going to do anything to get this market up, keep it up. And it's frankly scary what the ending might look like. So we, on a daily basis, going back to the daily chart for a moment, we do have resistance at the 200 period moving average at 297.16, and we're just shy of it. I mean, really a stone's throw away. Now, we do have jobs data coming out this morning. If it's really bad, I'm not sure what the expectation is. I didn't take a look before coming on live. You'll probably get a pullback here in the market, but I don't think that data is going to kill the market. I think that traders ultimately will view it as an opportunity to step in and buy the dip. Why? It's because the Federal Reserve is going to pump more liquidity. You had Goldman out there again yesterday. I believe J.P. Morgan as well, chiming in, saying we need more money. You got to print more money. And the Federal Reserve is going to say, okay, whatever you guys need. So we're flirting with the resistance level at the 200 period moving average. Let's go to my annotated version here. $291, interesting point to step in to buy the dip. We broke out yesterday. And you would think, normal times, price action like this on the 19th, that bearish reversal bar, normally you would expect to follow through to the downside. But in this new day and age, you know what? You get technical price action like that. The next day, you get a pop up higher. You break out. Yesterday's volume was very, very light. Let's see what we're doing this morning. Has anything changed from this morning or to this morning? We're holding that 20 period moving average on a 4-hour chart. I wouldn't short it. I think ultimately it's going to move up higher. I gave up on the short side. If you take a look at the trip Qs, let's go to the annotated view. Bearish price action. On the 19th, what did we do yesterday? We broke out. And we recaptured the 230 mark. We're stone's throw away from breaking out to new all-time highs on the trip Qs. We broke out on RSI. So what do I think about the spiders? I think that ultimately they're going to press them up higher. You may have a down day today due to the president's war of words with the Chinese. Here's Yang. And it was down yet again yesterday after putting in a bullish reversal bar on the 19th, and it gapped down. So while we may have an update here, we really need to take a look at Yang from a higher level view. And that is from a weekly chart. And we broke support. We hit support at 95.54. Might we rebound here? Maybe. I wouldn't go, simply because of a couple of tweets, I wouldn't go chasing Yang at current. Let's see how the market absorbs this news. We still have a ton of manufacturing in China, in particular pharmaceuticals. The president can only push so far until we have that supply chain changed. If people start getting anxious about their inability to get their pharmaceuticals, the president's going to be in trouble. So he can only push so far here. But I think that ultimately there's going to be a very, very nice China short trade to be had here. And that trade would include being long of Vietnam, Malaysia, and India. U.S. home loan delinquency surged by 1.6 million in April, and the stock market is at these levels. Yeah, because they won't let they won't let them go bankrupt. They won't let their homes go into foreclosure, and you know, it's sad to say, but it doesn't seem to be a capitalistic system any longer. And not that I want to see anybody lose their homes, not by any stretch of the imagination, because it could happen to anyone. I certainly wouldn't want it to be me or a friend or a family member. But the government's involvement here is just frightening to me. Once you let the government in, there's no getting them out. The banks, we're holding support here. We're beginning to hook up on RSI. Stokes was just stalled out here. I was looking for a rollover. Normally, in a normal market where we're not in this new dystopian future. I mean, what we'd expect to see happening in some socialist country is happening here and happening now, and we should have been breaking down to lower lows. We should have broken the March lows in any other economy, any other market, at any other given time. But now it looks as though they're just propping up the banks. Would I buy them here? Do I see any reason? No, not really, not yet. I certainly wouldn't short them. And I would look to buy them as we begin, or if we begin, to break out above resistance. But we're not there yet. Stokes are rising, which is good. And yields, I want to take a look at yields because yields matter, and I don't think that's getting enough play. The war that is going on in the bond market. Fact. We were taking a look at the yield curve yesterday, and when the Federal Reserve mentioned that they may be managing the yield curve, this is one of the ways that traders find price discovery. And if they're going to be managing the yield curve, how do you short this market? Normally when yield curves steepen, you get a correction in the stock market. For all I know, the yield curve should be up here, and the market should be much further down. But we don't know really don't know the true picture of what's going on here in this market. So I can't short it because the Federal Reserve is in there. A ton of volatility in the 10-year yield. And for the banks, and this really has to go, this goes back to the banks, our conversation with regard to the banks. Banks make money on NIM, net interest margin. So they need yields higher. And that's why you see the banks rally when yields move higher. But you're seeing this creep. And this would be a bullish story for the banks were it allowed to happen, meaning the yields on the 10-year were allowed to creep up, but they're being managed. And how do we know that? Well, last week we broke out of this triangle formation. Last Monday, not this Monday, the prior Monday, we opened up at spot 7.4. Where do we close? We closed out the week at spot 6.4. I need to make a correction. We opened at spot 7.3. But this is a big move. We had a bearish reversal bar. What do we do this week? Fast forward. We opened up again at spot 7.3. Now we're pulling back. Do we close lower? There's a tug of war going on here. And your Stokes is still rising. Interesting times. Dallas, I'm reading your comments right now. It's definitely not a free market from either side of the equation. It makes giving money to people to choose which business rise. Yeah, it's definitely a managed economy, no doubt about it. Trent, Stan Druckenmiller is bearish the market, so it'll probably go up. All right, let's take a look at load, LODE. Very nice, at least on a daily basis. Now you have resistance above on Comstock. What kind of mining company is this? What do they mine? Okay. Nice breakout. Here's my concern. Is when you overlay. Let's go back to the weekly. When you overlay I need to update TrendSpider, I guess. Why are you not showing me? All right, so for whatever reason, it's not showing me the monthly resistance level on a weekly chart, but it is showing it here on a monthly chart. So resistance at around spot 6.7. So we have some upside potential here. Daily chart. A really nice breakout yesterday. Very nice. But you have a little bit of resistance right here. Not a little bit. Probably pretty considerable. Right above. Let's call it 60 cents. And that's where we were stopped yesterday. The high of the day was 60 cents. So you have resistance from back here. Buyers from back here. Here. They want their money back. So a pullback, if you're looking for an entry point to... spot 5.7 thereabouts or lower would be an interesting price point. Between spot 5.6, spot 5.7, interesting price point to add or open a trade. Or if we break out above this upper band of resistance. But just beware of the volume above. I mean, the resistance above. Oh, silver miner? Okay. So silver's pulling back this morning. Maybe we'll get a pullback on LODE. And with that, folks, please join us tonight on Thursday Night Stock Charts Live. What we do on Thursday Night Stock Charts Live is we review the weekly price action on the charts to see how we're poised to close out the week. So it gives us an idea of how we want to be positioned going into the new trading week. And hope to see you there. And everybody have a profitable trading day. And I'll talk to you soon. Be well.